Well, good afternoon, everyone. Everyone who's joined us here for this TLRP webinar. We've run two of these before. My name is Richard Cullen and I'm the convener of the Tax Law Research Program within the Asian Institute of International Financial Law here at Hong Kong University. We're very pleased that we've had such a very good response. We've got a large enrolment today and people will be joining as I speak. Our speaker today is Dr. Oriol Caudevilla, who is speaking to us actually today from Barcelona, where he's based currently. Dr. Caudevilla is a fintech advisor, management and strategy consultant and researcher on digital banking and finance, digital currencies, blockchain, crypto, and mergers and acquisitions. Dr. Caudevilla is also a fellow of the Asian Institute of International Financial Law here at the University of Hong Kong, and he's a fellow of a number of other leading institutions, and he has presented at fintech conferences and events globally on quite a number of occasions. I don't want to take up any more of his time than is needed. He may say a few more words of introduction about himself, but we're very privileged to have him giving us this seminar today because he's done a lot of work in this area, and it's not an area that's widely discussed, that is taxation aspects related to digital assets and transactions in them. I'm looking forward to learning a lot myself because it's something which I confess I do not know a lot about. So Oriol, over to you.
Thank you very much, Richard, for inviting me and for presenting me now. And well, thanks as well to the Asian Institute of International Financial Law for hosting this webinar. And thank you to all the attendees for attending this event. I see quite a lot of people, almost 150. So thank you all. So basically, I'm going to talk about digital assets in Hong Kong. What are they and how are they taxed? I'm going to focus mostly on cryptocurrencies, to be honest, but still, I think it's important to talk a bit about this concept of digital assets in general. As Richard mentioned, my name is Dr. Oriol Caudevilla, and I work as a fintech advisor and management consultant and researcher. And I was actually, fellow a few years ago at the AIIFL in 2017, and last February I became an honorary fellow in there as well. So I'm quite, my connection with the HKU goes for long now. And when it comes to this event, to this seminar, I'm actually planning on talking for around 50 minutes or so, approx, because I got a lot to cover, many slides and many different topics. So my idea is that to talk about 45, 50 minutes, and then after that, maybe let's have like a 10, 15-minute Q&A session. I'm aware that I'm going to cover a lot, and you might have more questions than just those 10, 15 minutes. So this is why I'm leaving you my LinkedIn profile here below, in case you want to reach out to me afterwards. I'm going to be, of course, more than willing to solve any of your doubts or questions afterwards. Aside from that, just two more remarks. This session is being recorded, so all of you are going to be able to watch it afterwards from the AIIFL website. And aside from that, I'm also going to share my slides with the hosts, so they can share those with you as well after the event. So this is why, rest assured that either via the Q&A today or after the event, your doubts, your concerns are going to be properly addressed. So this is the index of my session. I'm going to start by talking about what are digital assets. Then I'm going to talk a bit about blockchain, because it doesn't make much sense to talk about all these areas of digital assets and cryptocurrencies if we don't know a bit more about blockchain. I know that all of you must know already about this topic, but still I feel like it's important to remember some very brief and basic ideas. Then I'm going to talk a bit more in detail about cryptocurrencies, about what they are, what are their main risks and challenges, and how they are regulated in Hong Kong and mainland China. And then finally, I'm going to talk about one of the key topics today, because this is at the end of the day a seminar or webinar related to taxation. No, so I'm going to talk about how digital assets are taxed in Hong Kong. It's actually quite a new topic, so this is why all the ideas I'm going to provide you with are quite new, quite recent, but I think it's interesting as well to try to bring some light to this new topic. About myself, I'm not going to dwell on myself for much longer, because Richard already introduced me quite well. So basically, I think it's just important to remark in here that I'm currently honorary fellow at the IIFL at HKU. And aside from that, I hold several positions for several organizations. I think the most important part to remark right here is the fact that I've been giving quite a lot of international to speeches in international conferences and universities lately, mostly on, to be honest, not so much on this current topic that I'm dealing with today, not on taxation in the area of cryptocurrencies, but mostly on central bank digital currencies, CBDCs, most specifically digital yuan. That is my main area of research. So this is why I've been participating this last year in over 40 international conferences talking about this. For anyone of you who might be interested, you may find all my videos on LinkedIn or YouTube, in case you are interested in digital yuan or similar areas. And when it comes to this session of today, I'm going to talk about digital assets, as I said, and blockchain. I'm not going to dwell on this for much longer, because it's actually covered later, so just some ideas here. So moving forward, the first area I want to explore is, what are digital assets? Well, in capital markets, digital assets are issued, transferred using blockchain. And it is very important to note, I think that part is actually basic, that digital assets and cryptocurrencies are not the same. While cryptocurrencies are all of them digital assets, not all digital assets are cryptocurrencies. So, broadly speaking, digital assets would be like the broad concept, while cryptocurrencies are one part of this broader digital assets concept. So you can see here on this slide, for example, some different types of digital assets, which includes cryptocurrencies, but also includes auditable digital currency, tokens, non-auditable digital currencies. And the same idea actually applies here. Among the very diverse types of digital assets, I chose 3 of them. I could have chosen more than that, but I chose 3 that are actually, or can be very related to finance. One of them is, of course, cryptocurrencies, which, as you know, is a digital currency secured by cryptography, which makes it nearly impossible to counterfeit or double spend. The other one could be what we call decentralized protocols and platforms, such as, for example, Ethereum. And the third one could be these asset-backed tokens, which are digital claims on a physical asset and therefore backed by that asset, such as, for example, the idea of tokenizing tangible things like gold or crude oil or equity. Those are asset-backed tokens. So in here you can see, as I said before, 3 different types of digital assets, but I don't mean by that all digital assets are included in here. These are just 3 types that I decided to include in here, because I think those are the most relevant ones when it comes to finance and these areas that I'm going to focus most on. So now that we know a bit more about digital assets, it was, I know, a very brief introduction, but I don't think we need more for now. I'm going to proceed by talking about blockchain, which is what I labeled a groundbreaking technology. Blockchain is actually the technology, or one of them at least, likely to have the greatest impact on the future of the world economy. For example, China's Central Television labeled or defined blockchain 3 years ago as 10 times more valuable than the internet. It's been considered for long a new technology, but I mean, it's not so new anymore. No? And it's quickly becoming a key player in many different industries. I mean, as all of you know, blockchain was invented to underpin the operations of cryptocurrencies, and more specifically, the operations of Bitcoin. That was initially. But right now, as of today, in 2021, blockchain can be and is actually applied to many more areas than just cryptocurrencies. I mean, blockchain is applied to, well, I mean, to countless areas, trade finance, healthcare. I'm going to talk about this in a few slides from now, though. One more idea. If there was no doubt of how important blockchain was or could be before the pandemic, I think that right now there is no doubt that this importance is going up and up. I mean, one of the things that this pandemic has brought along has been this this idea of turbocharging a fintech revolution worldwide. I mean, most of the aspects of this pandemic have, of course, been very negative for everyone. I mean, there is no doubt of that. But I guess on the plus side, to put it that way, it's brought some, I don't want to say good things, but at least some well, good things. Maybe not. I mean, I don't like to use the word good in this case, but I mean, might be so. No? Like, for example, the idea that we've become much more virtual in many ways. And one of the good aspects that we may have learned from this pandemic has also been this this idea of seeing how fintech has been turbocharged worldwide. No? I mean, not just in Hong Kong, of course, but everywhere. So how does blockchain work? Blockchain is unfalsifiable and impossible to change once a record has been added. It's actually a distributed database stored on multiple computers as a massive number of identical copies. Blockchain is part actually of what we call the DLT, Distributed Ledger Technologies, being a digital register whose entries are grouped in blocks, concatenated in chronological order, and whose integrity is guaranteed using encryption. Although its size is destined to grow over time, it is immutable because its content is no longer modifiable unless you invalidate the whole entire data structure. So basically, to ensure consistency between those various copies, the addition of a new block is globally regulated by a shared protocol. Once the addition of this new block is validated, each node updates its local copy. Well, basically, you can see what I just said on these next two slides. I mean, I know that most of you are already familiar with this idea, but still, I mean, it's actually pretty simple, no, when you see it like that. I mean, when you try to go to a more like technical level, it's of course much more complicated. But I mean, from a broader perspective, it's actually not that tricky. I mean, as you can see, there is one party requesting a transaction, which is this transaction is funneled into this P2P network and broadcast to each individual computer or node. Then each individual node receives that request and validates a transaction using an algorithm. And then after that, those approved transactions are represented as blocks and added to a public ledger. And finally, once this block is added to an existing chain, those transactions are complete and permanent. So that's pretty much the idea. That's the same, but expressed differently. But the idea is pretty much the same. So let me move forward to the next. As I said before, even though a blockchain is best known for underpinning the operations of cryptocurrencies, such as Bitcoin, and it was actually invented for that purpose, this technology can actually be used in countless other areas, such as, for example, trade finance, smart contracts, financial services, insurance, video games, IoT, healthcare, CBDCs, and so on and so on. So before moving forward to what cryptocurrencies are and how they're regulated in Hong Kong, I want to have like a quick overview of the main applications of blockchain, or just a very brief summary, so you can see actually how diverse those areas, those different applications can be. The first one, for example, is cryptocurrencies, but I'm actually going to skip this one for now, this slide, because I'm going to talk about this like in a more detailed way later on. I just wanted to remark the fact that cryptocurrencies have been there like for a while, for like more than 10 years. But it's been, I think, recently where it's become much more mainstream. I mean, you are currently like reading about Bitcoin and other cryptos pretty much on a daily basis. I mean, it's everywhere on the media, and this is because of several reasons. But one of them, I mean, it's not the only one, but to me, it's one of the most important ones, is the fact that cryptos are starting to become much more widely accepted because those big institutional players are already like trying to tap into this market. I mean, a few years ago, it was just either retail or institutional investors, but not maybe so well-known brands tapping into this market. But right now, we've seen like, especially since last July and August, many big companies tapping into this market, such as, for example, PayPal, as you can see here. PayPal in the US is accepting cryptos to make payments. Then DBS in Singapore, for example, they created this crypto exchange last year. Or, for example, MasterCard as well. I mean, MasterCard started to bring crypto onto its network in February. And actually, their press release, the one that you can see partially quoted here on the right of my slide, is actually a very relevant press release, and I highly encourage you to try to look it, because what they say is something like, by bringing cryptos onto its network, MasterCard is neither encouraging nor discouraging people from using cryptos. What they are doing is simply acknowledging that there is a new reality, and this reality is the fact that cryptos are starting to be much more widely used and accepted, much more mainstream than they used to be before. So that's pretty much the whole idea. So by accepting cryptos, you don't need to like be agree 100% with the idea, or you don't need to try to encourage people to trade them. I mean, you simply need to acknowledge that there is a different reality going on. And I think that's the key part from that press release, and I actually agree with most of it. And then there was one more part on my slide. That one was Tesla, but I decided to remove that one because, as you know, Tesla started to invest and accept cryptos in January, but then Elon Musk kind of changed his mind a few weeks ago because of the carbon mining consumption of crypto. So this is why I decided to include Tesla on this slide. One more application of blockchain could be central bank digital currencies. I'm going to talk very briefly about them. CBDCs are nothing else but a digital version of the central bank money that we already have. So basically, a digital euro or the digital yuan in China, for example, is going to be nothing else but a digital version of that euro, yuan, US dollar that we already have. So the idea is that one, but it's actually more tricky than that, because CBDCs are, for example, programmable. I mean, you cannot program a note, a banknote, or a coin, but a central bank is going to be able to program those CBDCs in order to add or remove certain features from them. I'm going to skip this one. A CBDC, to be a CBDC, needs to fulfill like meet two different criteria. It's being digital. Of course, I mean, otherwise we wouldn't like be talking about a central bank digital currency. And the other one is the fact that they represent a liability against a central bank. And this is so because, as I said before, central bank digital currencies are central bank money issued by a central bank. I mean, there might be like several motivations behind CBDCs. I mean, the rationale behind them may be different. In some cases, a CBDC is going to be launched to replace physical banknotes, to improve financial stability, for monetary policy purposes, to promote financial inclusion, to try to internationalize your currency, which is the case of China mostly. I mean, when it comes to digital yuan, I think that, I mean, I'm not going to dwell on this for much longer because I've already written a lot about that, but we can talk about that later if you want. But the digital yuan basically, to me, aims to try to help China to internationalize its yuan. I mean, broadly speaking. Then one more remark that I wanted to make here is the fact that, strictly speaking, CBDCs are not cryptocurrencies. First of all, the rationale behind them is actually the opposite. I mean, as you already know, cryptocurrencies are like as decentralized as anything can be. I mean, they are the flagship of this movement known as DeFi, decentralized finance, whereas CBDCs are actually, as I said, the opposite, issued by a central bank and controlled by that central bank, and they are legal tender. So the rationale behind both is actually the opposite. And when it comes to basically to another possible difference is the fact, and I know this one is actually not well, this idea is not shared by everyone, but to me, one second difference would be the fact that their use is different, because they are serving different purposes, different realities. A CBDC is going to be a digital version of the central bank money that we already have, whilst cryptocurrencies, even though they may be used for making payments, they are normally, generally speaking, more like an investment asset class. I know that it is possible, of course. I mean, I said that PayPal allows you to do so in the US, and it's possible to do so in many other countries through many different apps or companies. I mean, it's possible, of course, to use cryptos for payments. That is true. But generally speaking, normally, most people who buy cryptos do so to for investment purposes, to hold them for a while and then to sell them for a profit. I mean, that's the idea. So it is true that it might be used for payments, but not to the extent, not to the same extent as CBDCs, for example, or the central bank money that we already have. I'm going to skip this one. It's not very relevant. Basically, I mean, if I included this one on this part of my talk, it's because CBDCs are going to be partially based on blockchain as well. I mean, not entirely. For example, when it comes to digital yuan, it's going to be working on this two-tier system, as we call it. So basically, on a first level, the People's Bank of China is going to issue digital yuan to the commercial banks without using blockchain. But then on a second level, those commercial banks are going to issue digital yuan to the general public through the use of blockchain. So this is why digital yuan, for example, is going to use blockchain partially, and this is why I included CBDCs here on this slide inside potential applications of blockchain technology. One more potential application is trade finance. Trade finance makes reference to those financial transactions where financial institutions provide credit to guarantee an exchange of goods. It's very important to apply blockchain here because normally those traditional trade finance processes, letters of credit, etc., are still what we call a very resource-intensive operation due to the physical exchange of documents. So this is an area which hasn't changed much for the last decades or even centuries. So this is why applying blockchain to trade finance may actually be very relevant. And Hong Kong is actually one of the pioneering areas in this area, because we have, for example, this E-Trade Connect platform in Hong Kong, which is actually one of the pioneering platforms in Asia. Then we also have one more application called smart contracts, which are basically self-executing contracts with the terms of the agreement between buyer and seller being directly written into the lines of codes. Smart contracts, which is, I'm sure, a concept that you must have heard many times before, permit what we call trusted transactions and agreements to be carried out among disparate anonymous parties without the need for a central authority or external enforcement mechanism. So the biggest benefit of smart contracts is this idea of automation. It allows theoretically for interruption-free and automated processes to go on, to be carried forward. You can see on this slide, on the next one, a few smart contract use cases, areas where smart contracts may be applied, such as digital identity, financial security, trade finance, government, financial data recording, supply chain management, escrow, mortgages, trading activities, etc. Then you can see a summary here as well of the main benefits offered by smart contracts, and those would be the idea that smart contracts are interruption-free, autonomous, secure, accurate, fast, cost-effective, and trustless. So, okay, let me summarize a bit what we've seen so far. We saw what digital assets are, and we saw that cryptocurrencies are one category within this broader idea of digital assets. We also saw the fact that cryptocurrencies and most digital assets in capital markets use blockchain technology normally. So this is why we saw what blockchain is and some different applications of blockchain. And now, finally, I'm going to move forward and talk a bit more about probably the most famous digital asset, especially nowadays, and that area, that asset is cryptocurrencies. Cryptocurrencies, as I said before, is a digital currency secured by cryptography, hence the name cryptocurrency, which makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies, most of them are decentralized networks based on blockchain. A defining feature of cryptocurrencies could be the fact, the idea that generally cryptocurrencies are not issued by any central authority, making them, in theory, immune to any kind of government interference or manipulation. This is why I said before that the rationale behind cryptocurrencies is actually the opposite in many ways than that of, for example, central bank digital currencies, which were like designed to be issued by a central bank and controlled by that central bank. Cryptocurrencies are actually the opposite when it comes mentality-wise. I mean, they are the flagship of that DeFi movement, which I mentioned before, this decentralized finance movement. And it is precisely to well, not to be controlled by any central bank or government, which is tricky because, I try to adopt a balanced approach to this topic of cryptos. And I think that one of the risks of cryptocurrencies is precisely that one. I mean, this idea of escaping any kind of control and not being regulated, well, I mean, it makes them, let's say, volatile and a bit tricky sometimes. It's something that I'm going to explain in more detail later. Well, I mean, dwelling a bit on this definition of cryptocurrencies, it's a form of digital asset based on a network that is distributed across a large number of computers. This decentralized structure allows them to exist, and as I said, outside this control of governments or central authorities. As I said before, I just said that CBDCs are not cryptos because one is centralized whilst the other one is centralized, and also because, generally speaking, they serve different purposes. I'm not going to dwell on this one either because I already explained that before when I was talking about CBDCs. So I don't think it's necessary to speak any longer about that. Well, this one is just an overview of the main cryptocurrencies. This information is from last week, so it may have changed a bit, but still, it's very important in the same way that I ask you to please not confuse cryptos with blockchain, because blockchain is actually a technology. No, it's a technology that can be applied to many different areas. Being cryptocurrency is just one area of application, one use case of that technology. So in the same way that this is true, it's also true that cryptocurrencies are actually a broad concept. I mean, there are many kinds, many types of cryptocurrencies. It's not all about Bitcoin. I mean, as you know, there is Bitcoin, Ethereum, Tether, Cardano, Dogecoin, Binance Coin. I mean, there are well, I mean, lots and lots of different cryptocurrencies. So, I mean, that's very important because even in the media, sometimes you may be seeing people well, making mistakes. I mean, I read last year some media talking about China's digital yuan or referring to it as China's Bitcoin or something like that. I mean, that's completely, of course, horrible because China's digital yuan, for example, is a CBDC, as I said before. Therefore, it's not a cryptocurrency. But even if we talk about cryptocurrencies, just talking about crypto doesn't mean necessarily that you talk about Bitcoin. You may be talking about any of the many other types of cryptocurrencies. So this is why you need to be careful when it comes to the terminology used, because even on the media, it's kind of common to see some mistakes when it comes to that. Well, moving forward, risks and challenges. As you know, cryptocurrencies are a tricky subject. I mean, some people love them. I mean, it's easy to find crypto enthusiasts, like people who think that central bank money maybe ought to disappear and similar. And then on the other hand, it's possible to find people who hate cryptocurrencies and think they should be banned. So, well, I mean, any position is respectable, of course, but I think I'm going to try, as I said before, to adopt a balanced approach and try to let you know, well, I mean, what I said before, know what they are, how they're regulated, how they are considered tax-wise in Hong Kong. And I think it's important here as well to talk about the main risks and challenges of cryptocurrencies. I chose 4 different risks, being the first 2 the main ones. One of them is volatility, and the other one is regulatory risks. When it comes to volatility, I think it's undeniable that cryptos are very volatile. This is what makes crypto such an interesting investment asset class for certain investors, because I mean, we saw last year, for example, with Bitcoin. I mean, its price can surge, can go up enormously in a very short period of time. So this is why cryptos may be such an interesting asset investment class. That is true, but at the very same time, this is what makes crypto so risky, because you may be either making a lot of money in a short period of time or losing a lot in a short period of time. No, this is what volatility has. So that's why I mean, caution is required before approaching this area, no? Because you need to know a bit about this world before trying to invest too much, because it's a very volatile area. And the second risk comes from the idea of regulation. I mean, the regulatory risks. One thing about cryptos, as I said before, is the fact that they are not central bank money, they are not legal tender anywhere. But still, I mean, you never know when a certain government is going to adopt a tougher stance towards cryptos, no, compared to the previous day. You know, for example, that a central government is not going to play with its own central bank money. I mean, they are not going to harm themselves. But when it comes to privately issued cryptocurrencies, you never know when things are going to change and how. That makes cryptos a bit risky as well. I mean, it's true that, for example, you can have some ideas, you know, for example, that Singapore is very crypto friendly, whereas China has adopted a tougher stance towards cryptos these last few years, and even last week they went a bit tougher towards them. So any position is respectable, and you may already have a certain idea of what countries are more crypto friendly, which ones are less crypto friendly. But still, the thing is that you never know how or when things are going to change. So that makes cryptos a bit more risky than other asset investment classes. The third risk is this idea of the loss or destruction of the private key. I know this one may sound silly, but it's not silly at all. Since cryptocurrencies are normally based on blockchain, normally those wallet apps that you're going to use to trade cryptos are going to be based on blockchain as well, of course, which means that your personal information is not going to be stored anywhere. So unlike, for example, your personal banking app, where you need to, of course, to write down your credentials, I mean, your let's say your ID, for example, and your password. But should you forget your password, you may, I mean, there are ways for you to retrieve, you know, to generate a new password. I mean, you may need to go physically somewhere or not, but there are ways for you to do so. When it comes to those wallets, there is no way to do so because that information is not stored anywhere. So basically, if you lose that piece of paper where you wrote down your password to your wallet, well, normally it means that you lost all your investment in cryptocurrencies. And I know it sounds silly, but I mean, you may found in the media many people I mean, there have been cases. I read last year about someone, I think it was in the US, who lost I think more than $1 million worth investment in crypto just because that person lost a piece of paper where he wrote down his password, you know, his key to access the wallet. So this is one more risk that cryptos may have. I know it's silly, but still, I mean, it's happened before, no, for people to lose their money because of such petty, silly things. And one more risk, well, I don't know if it's a risk or mostly a challenge, is that idea of taxation. I think it may be a risk and a challenge in the sense that being cryptocurrency so new implies as well that most people don't know how they're going to be, what taxes they need to pay for their cryptocurrencies, for holding them, for selling them, and the same way that even many countries' tax departments have not like an actually very clear idea on that either, because it's very new. It's not the case of Hong Kong. Hong Kong has actually quite a clearer idea compared to other places, but still, I mean, it's always a risk or a challenge in the sense that it's a very new area. So moving forward, before jumping into the taxation part, I just wanted to talk a bit about how blockchain is regulated in Hong Kong. I'm talking now again about blockchain, not only cryptos. I'm going to talk about crypto regulation later on the next slides, but right now it's just a blockchain in general. Well, as you know, the HKMA, Hong Kong Monetary Authority, published 2 white papers on blockchain and DLT in 2016 and 17, proving its commitment to the development of blockchain-related solutions in Hong Kong. Those 2 white papers are the ones that I mentioned here, and for any of you interested in reading those, I highly encourage you to do so. Those white papers are actually one of the first documents issued by a regulator in Hong Kong contemplating the legal challenges arising from the use of blockchain. This paper focuses on 7 different areas or categories, including, for example, data protection and privacy, validity and enforceability of smart contracts, legal issues in some applications, such as, for example, trade finance, etc. So I think that white paper is interesting because it doesn't deal with cryptocurrency specifically, but mostly with blockchain in general. So if you are interested, for example, in, let's say, trade finance, as I mentioned before, those blockchain-based trade finance platform like eTrade Connect in Hong Kong, etc., it's interesting for you to try to read those white papers as well. However, even though blockchain there may be some white papers and regulations making reference to blockchain, the thing is that as it happens in most jurisdictions worldwide, the area that has seemed to catch most of the attention of Hong Kong regulators is that of cryptocurrencies. I mean, it makes sense because it's maybe like the most mainstream area and also the riskiest ones in many ways. So this is why cryptos are more regulated than the whole of blockchain in general. Moving forward, I'm going now to tell you a bit more about how cryptocurrencies are regulated in Hong Kong, which is actually a work in progress, because for those of you who have followed the news on this area lately, well, you must have read that there is a new law which is going to be passed next year. So this is an area in constant movement. For those of you who attended the Hong Kong FinTech Week in November, you must have heard Ashley Alder, the CEO of the SFC in Hong Kong, talking or announcing a proposed new licensing regime for virtual assets trading in Hong Kong. And he announced as well the launch of a public consultation that was in November, and that consultation was due on January 31st. On the area of legislative proposals designed to enhance anti-money laundering and counter-terrorist funding in Hong Kong. The main idea is the fact that Hong Kong will regulate all cryptocurrency trading platforms operating in the special administrative region, changing its previous opt-in approach. So basically, all cryptocurrency trading platforms that operate in Hong Kong or target investors there will need to apply for an SFC license, which is something that didn't happen before. These new regulations will cover, this is what it was announced back then, all types of virtual assets trading platforms operating in Hong Kong, as well as overseas platforms targeting local investors. Well, I mean, to me and actually to many more people in the industry, this new proposed regime will be generally speaking, beneficial because it will put everyone in a level playing field, thus giving investors a safety net, and helping the digital asset market to grow in the long run by giving everyone more confidence in this area. My main concern, it's not actually only my main concern, but it's many people's concern, comes from the idea of excluding retail investors from accessing virtual asset services in Hong Kong. Retail investors actually represent a very significant portion of the market. And I mean, actually, I think that due to its nature, it's precisely this group of people who need like the most regulatory protection and attention. So this is why, to me, this proposed regulation makes sense, and it should be welcome. But I think as well that retail investors should be somehow included or targeted as well. And well, that was, as I said, in November. Then several entities submitted their position papers to that public consultation. But the latest developments on this happened very recently, just 10 days ago, where the Hong Kong government and SFC published the consultation conclusion on the licensing regime for crypto exchanges in Hong Kong, whose link you can find in here in case you want to check it. And this law will be introduced in the 2021/22 legislative session. I mean, there are many interesting points that we can extract from these conclusions, but I think that the main three would be the fact that all crypto exchanges will need to be regulated. So anyone seeking to engage in this regulated activity of operating a crypto exchange in Hong Kong will need to apply for an SFC license. Then, second, regulated crypto exchanges can only service professional investors, leaving out, therefore, retail investors, as I said before. And a retail person that doesn't have $1 million of liquid assets, and cryptos are not liquid assets, cannot be a client of these exchanges. So basically, it's pretty much the same idea as I said before. I mean, we need to welcome these regulations because, well, the idea is precisely to put everyone in a level playing field and giving more like security to investors. But at the same time, it seems to me that leaving out retail investors may be perhaps tricky, and this is maybe an area where regulators should focus more on the future. Because I mean, as you can see here, the threshold $1 million in liquid assets is actually very high. So it's pretty much leaving many people outside of this regulation. When it comes to mainland China, and after that I'm going to move finally to the taxation part. When it comes to mainland China, well, basically their approach is different from that in Hong Kong in the sense that mainland China is promoting blockchain as well as a technology. I mean, for example, President Xi gave a speech in 2019 encouraging companies to seize the opportunities offered by blockchain in what appeared to be one of the first instances of a major world leader backing this technology. So this shows you that blockchain is actually promoted by the Chinese government. The Chinese government is also promoting its digital yuan, which is a CBDC, as you know, but not a cryptocurrency. But at the same time, China has adopted a very tough stance towards cryptocurrencies. Unlike Hong Kong or even more Singapore, mainland China is much tougher on cryptos. Well, many people wonder whether it is consistent for China to promote the digital yuan while banning or being so tough on cryptos. The thing is that, yes, I mean, it's consistent for them to do so because, as I said before, we're talking about different areas. So cryptos are not CBDCs. Therefore, a country may promote a CBDC but be tough on cryptos, or promote a CBDC and be much more crypto-friendly. I mean, it's not related. When it comes to cryptos, in recent years, especially since September 2017, the Chinese government has been taking a series of regulatory measures to crack down on activities related to cryptos, mainly due to the concern over financial risks. So you can see in here a summary of what's been happening in China these last few years when it comes to cryptocurrencies, starting from this 2017 ban, where then this the current situation from 2017 onwards, and then this new ban from a few days ago. Well, I mean, the whole idea is that crypto trading platforms in China are not allowed, and institutions must not accept virtual currencies as a means of payment. So people are allowed to hold Bitcoin or any other crypto. They are allowed to do so, but what they are not allowed is to use them as a means of payment or use any digital exchange, any virtual trading crypto trading platform. So that's pretty much the idea. So it's not like a complete ban, but well, I mean, most part of cryptos are banned. No, we could put it this way to summarize. And finally, last but not least, one of the areas which is actually like one of the most important parts about my talk is this area of taxing digital assets in Hong Kong, and well, more specifically taxing cryptocurrencies. Well, I mean, initially there was no guidance in Hong Kong on how cryptos should be taxed. I mean, this is something that happens in many jurisdictions, as I said before. But last year, on March 27, 2020, the Inland Revenue Department issued this revised Departmental Interpretation and Practice Note, the IPN number 39, covering digital economy, electronic commerce, and digital assets. Well, by most industry members, the IPN 39 is considered as a very relevant step to make Hong Kong's position in this area much stronger. So basically, throughout the next slides, I'm going to try to summarize to you the key points of this the IPN 39. Basically, the taxation of gains and losses arising from digital assets will depend on both the type of digital assets and how those assets are used in the taxpayer's business. The IPN 39 provides 3 different categories of digital assets and establishes how they can be like classified for tax purposes. Those 3 types are payment tokens, security tokens, and utility tokens. Focusing, for example, as well, payment tokens would be cryptocurrencies, which are not legal tender in Hong Kong, of course, but are considered virtual commodities. Then, security tokens, well, I mean, it's very relevant to say that where those digital tokens are securities as defined in the Securities and Futures Ordinance, those tokens and activities involving them will be subject to the regulations by the SFC. So they are subject to the SFC regulations in that sense, as long as you can like label them as securities. That's the main idea that you need to get from here. I mean, as stated by the IRD, there is currently no specific legislation for digital assets in Hong Kong, which is pretty much what I said before. No, I mean, and we need to bear in mind this idea of securities and subsequent idea of Securities and Futures regulation applying to those digital assets. I know it sounds very well, it may sound like a mess right now, but in the end, I'm going to try to summarize this all and then bring some light to this topic. I know it's a bit tricky now, but well, one area which the IPN 39 deals with is initial coin offerings, ICOs, which would be like the cryptocurrency world equivalent to the IPOs. And basically, it's a way for crypto companies to raise funds initially. For tax purposes, the nature of the token itself will determine its classification and not the stated intention of the issuer. So it's mostly about the nature. Well, you can see two examples of this in here. When it comes to the right to receive a dividend, when it comes to the right to future benefits. So I mean, you can feel free to check those as well if you want, but I'm going to skip this one because there are some areas where I want to put the most of my focus on. This one, for example, is more interesting and maybe more relevant for some of you. Digital assets held for investment. Profits arising from the sale of capital assets are excluded from the charge of profits tax. So if those digital assets are bought for long-term investment purposes, any profits from disposal would not be chargeable to profits tax. However, whether the digital assets are capital assets or trading stock, has to be considered on the basis of facts and circumstances. So I think that the whole idea in here is, and I think that what I'm going to say is maybe like the most important part of this whole taxation part, is the fact that, I mean, as you know, Hong Kong has like no capital gain tax. Then, when we talk about digital assets held for investment, if they are long-term, we need to consider them as capital. Therefore, they are not chargeable for profits tax. So it's pretty much what I said before. Then, the whole idea in here, and actually when it comes to taxing cryptos in Hong Kong, arises from determining whether that digital asset that you hold is a capital asset or trading stock. So it's very important, no, and to try to establish capital asset versus trading stock. And that distinction is actually going to depend on the facts and circumstances. So whenever we talk, for example, about the sale and purchase of cryptocurrencies, which is something that might be interesting to you, I mean, there is, in that case, there will be no profits tax. However, it changes if you are what we can call like a professional trader. Now, in that case, you would be subject to income tax, not to profits tax, but to income tax. And once again, it becomes kind of tricky to establish what a professional investor is and what is not a professional investor. It's going to depend basically on a matter of proving the facts and circumstances. You know, I mean, how much time do you devote on trading cryptos? I mean, is it like something that you do just like half an hour per day, or is it something that you devote most of your time to doing? Then on a second level, what amount of cryptos are you actually trading? Is it just like a few cryptos for a friend, or you have like a big portfolio? So all these things are actually going to be like the ideas used to establish, to determine whether you are a person like buying or selling cryptos simply like an individual, and therefore not charged for profits tax, or whether you are like a professional investor, a trader, in which case your digital assets, your cryptos wouldn't be considered capital assets, but trading stock. In that case, you would be taxed not for profits tax, but for income tax, because it would be like your income, because you are spending most of your time in doing so. It's like your job, because you're doing that professionally, from the tax regulator's perspective, at least. The IRD also mentions this, one more case, which is cryptocurrency businesses. Common business activities involve trading of cryptos, exchange of cryptos, and mining. Mining is, of course, a very important area. I'm sure that you heard about miners before. I'm not going to dwell on this, but this is pretty much what I said before as well, so I'm not going to stop on this any longer. This one, I mentioned that before as well when I talked about profits and income tax, but this one is actually a new case scenario. It's the case of cryptocurrency received as an employment income. I know it's not very common, but I mean, it happens sometimes. I mean, as I said before, it's not common, but still, it may happen. So the DIPN 39 issued by the IRD also covers this possibility. So basically, employees, particularly those working in the digital asset sector, may be paid their salary, for example, in cryptos. The same salaries tax treatment would apply to such income from employment, even though it is paid in cryptocurrency. The amount to be reported as employees' employment income should be the market value of that cryptocurrency at the time of the accrual. So the idea is pretty much the same. And whether you are paid in cash, I mean, in traditional central bank money, or in cryptocurrencies, you are subject to salaries tax, to the same treatment. The biggest hurdle in here is basically to establish the market value of your cryptocurrency. I mean, that's the only issue, because I mean, you know for sure that I don't know, 50,000 Hong Kong dollars are 50,000 Hong Kong dollars. No, I mean, we know that, but it's more tricky because of that volatility that I mentioned before, and that idea that you could see when I was talking about different kinds of cryptos. No, it's more like difficult, to establish how a cryptocurrency should be valued, because of how much its price, its value fluctuates. So this is why we need to consider the market value at the time of the accrual. And well, as a summary, it's pretty much what I said before. No? When it comes to the holding, the idea of holding a digital assets for long-term investments, as well as trading, mining assets, etc. Those are two areas that can be like dealt with in the future, but I'm going to skip those as well. Sorry for being such a rush, but I want to cover everything. And as I said before, I'm going to make those available to you afterwards. This idea is what I said before as well. No, I mean, if I buy crypto and sell it later for profit, I don't owe any tax on these profits, because profits arising from the sale of capital assets are outside the scope of charge for profits tax in Hong Kong, unless you fall into the category of professional trader, and you are actually not like selling a capital asset, but you are like trading trading stock. Now, in that case, you will be taxed. But as I said before, being a professional trader depends on where your main income trades from, how you organize your activity, the time you spend. It's the same idea that I mentioned before already. And while income derived in Hong Kong is taxed in Hong Kong, whilst income derived outside of Hong Kong is tax free. So I know that this is a basic idea that you already know, but in the case of cryptos, it might be a bit more tricky, because determining where profits are derived can be complicated because precisely of this borderless nature of cryptocurrencies. To me, this IRD's approach is consistent with the general profits tax and salaries tax charging provisions. And generally speaking, this clarification was welcomed by the growing digital asset and fintech community in Hong Kong, no? Because it's generally regarded as a wave to help Hong Kong to grow as a center for institutionalized digital asset investors and service providers. And now, before finishing in like 1 minute, I wanted to provide you with a quick overview of several jurisdictions. I'm not going to dwell on like each one of them because there is like no time. I'm already like over time. I mean, I analyzed several countries, so you can double check this when I share my slides with you. Australia, for example, in Australia, individuals are taxed on their gains from the disposal of the asset. But there is an exception in the case that the asset was held for investment purposes. That's the idea for Australia, but what else? Austria, I'm going to skip this one. Belgium, I'm skipping this one, but as I said before, I mean, rest assured that you can double check that when I share the slide deck with you. US, for example, Bitcoin and the other cryptos have been like classified as an asset similar to property by the IRS and taxed as such. So US taxpayers must report Bitcoin and other cryptos transactions for tax purposes. Retail transactions using cryptos, such as the purchase or sale of goods, incur in capital gains tax. And Japan, for example, which distinguishes between the income generated by occasional trading and the income generated by trading as a business. Now, so in one case, occasional trading of virtual currencies in principle classified as miscellaneous income, whilst income derived from the trading of virtual currencies as a business is classified as business income. That's just a quick idea. And that pretty much concludes my talk. You can find in here some conclusions, but I think the most important conclusion is the fact that, as I said before, blockchain is much wider than just cryptos. And when it comes to cryptos, you need to be aware of the potential risks and also be aware of how cryptos are taxed in Hong Kong and elsewhere, depending on you live, because it's actually a new area and tricky because of its nature. So thank you very much for attending my webinar. And now let's move to the Q&A session. I'm going to stop sharing my screen.
Thanks very much, Oriol. I see there are several questions there. Maybe there's time for you to look at them and answer one or two of them.
I don't understand how a CBDC can make a currency more international. It's not internationalization driven by other factors and policies. Actually, yes, this one is related to CBDCs, which is a topic that, as I said before, I love. So, yes, it's true that making a currency more international depends on several factors. I mean, it doesn't only depend on whether a central government or a government or a central bank issues a CBDC or not. That is true, but CBDCs may actually make currencies more international. I mean, we are seeing that in China right now. China, for example, signed the RCEP Free Trade Agreement in November, which is, as you know, like it's creating a huge free trade area encompassing like almost a 30% of the world's GDP and population, and this might be like an ideal platform alongside the Belt and Road Initiative for China to try to internationalize its digital yuan. We also saw China, for example, the PBOC actually signing a joint venture with SWIFT to internationalize the yuan through the digital yuan. And it can be used more, it can be made more international, but it requires for other countries to, I mean, it's not just by a country issuing a CBDC that your currency will become much more international. You require the other parties also to establish the right platform. There needs to be interoperability, interconnectivity between the different countries. And I think it's also important to remark, well, the fact that that when it comes to the digital yuan specifically, for example, even though it may become more international, the yuan, thanks to the digital yuan, there are some challenges still in there, such as, for example, the fact that the yuan is still a non-convertible currency, so that hinders its internationalization process a bit. So I mean, I'm not saying that, for example, the digital yuan is going to to challenge the US dollar dominance like overnight, but it might be used for those purposes. Is not the crypto market subject to all the operational risks that any IT or financial system is subject to? We have read how many exchanges have been hacked and robbed, and there is an unknown amount of audit of operations, processes, and regulatory oversight. Well, I mean, it is true that the crypto market is subject to risks. It's true. I mean, whenever we say, for example, that a blockchain is practically infalsifiable, practically impossible to hack or to tamper with, it doesn't mean that it's like entirely impossible. I mean, there are scams involving cryptos. There are like platforms which have been like hacked before, so it's not impossible for that to happen. And I think that one of the areas that make crypto so attractive to many people, but at the same time so risky, as I said before, is the fact that there may lack some regulatory oversight when it comes to crypto. So this is why, I mean, yes, it's true that it's subject to other risks, and it's, of course, I mean, cryptos may be more secure than other areas, but still there are many risks going on. That is true. What's the expected time frame for the HK legislative changes to be implemented? Well, I think as far as I read, it's going to be introduced in the 2021 and 22 session, and they will be implemented, if I'm not mistaken, next year. I think it's by the end of 2022. That's the idea. Once this legislation is passed, will there be any niche loopholes, ways for retail investors to keep trading cryptocurrencies using overseas-based exchanges? Yes, exactly. I think it's actually, your idea is spot on. I mean, I think that the way for them to keep trading cryptos is going to be, I guess, to use overseas-based exchanges, but those exchanges cannot like retail to or market to Hong Kong people, because if they do, they're going to be subject to the Hong Kong regulation. So they should be using some overseas-based exchange, which is not theoretically targeting Hong Kong people. But the thing is, that's why I said before that that to me this new regulation is actually like accurate in many ways. But I think that retail investors should have somehow been included as well, because I think those people are actually the ones that need like the most protection. An institutional investor like who trades with millions and millions of Hong Kong dollars in cryptocurrencies, generally speaking, is going to be someone who theoretically already knows what he's doing and what the risks of what he's doing are. So this is why I feel like the new regulation should actually have focus as well on retail investors, which are the ones like more prone to be like either scammed or be making like investments that they may regret. So this is why I think that the new legislation is actually very welcomed, and it's actually great in many ways. but maybe it lacks this reference to covering, specifically retail investors. That looking at the latest regulation on the ban on crypto, do you think that this will just result into a lot of exchange P2P or OTC trading? I mean, it's hard to say. It might be so. I think it is possible that it happens. That that person saw that CBDCs are cryptocurrencies. Are there different ways of classification in the industry? Well, I mean, of course, you may read many things. No, I mean, online there are many people. As I said before, there's even like people and media who refer to as digital yuan as China's cryptocurrency or something like that. But CBDCs are not cryptocurrency. You're going to see in some websites and even reports those being like compared and even labeled in the same way as cryptos. But a CBDC is not a privately issued cryptocurrency. So you must have read that, of course. Many websites may say that, but it's not accurate at all. As a taxation for crypto is determined by its time spent, etc., what and where would the guideline be for it? Well, yeah, I mean, it's not actually the taxation, generally speaking, but it's the fact that if you are purchasing and selling a cryptos, theoretically as an individual, you are theoretically using capital assets. No? Whereas if you're doing so, like professionally speaking, you are considered an institutional investor, and therefore it's regarded as trading stock. You're right. I mean, I said that it depends on the time, the amount spent. There is no guideline for it. I mean, the guideline, the closest thing that you have in Hong Kong to a guideline is this DIPN 39. I mean, before this DIPN issued by the IRD, there was nothing. So that short document is the closest you have to any guideline. So after that, I mean, as it happens, actually, when it comes to most tax-related issues, it's all going to depend on the practice, no? So, I mean, there is like no proper guideline. I mean, I guess that over time, there's going to be like some practice that you may refer to. Right now, that's why I said before that this area is thick, because there is like no proper guideline. But I mean, in some cases, there may be like cases that are on the borderline, but generally speaking, some cases are very clear. I mean, if you spend like 10 hours per day trading in cryptos and you have like a huge portfolio of, I don't know, 10 million Hong Kong dollars or so, I mean, you're obviously going to be like an institutional, like a professional, no? like a professional trader. So that's why there is no guideline, but I think it's mostly common sense and keep waiting for the time to pass, to go by, and then see what's been established before. No, so that's why I said the closest to any guideline is this DIPN 39. To what extent does blockchain technology can be used in tax administration in Hong Kong? Well, I mean, blockchain can be used in, actually, as I said before, in like pretty much in any area, no? And it actually makes most processes much more efficient, time-wise, cost-wise. The thing about blockchain, though, is that sometimes you need to wonder. I mean, blockchain is not like any kind of magical thing, no? Any like government or company needs to wonder whether it's going to bring actual benefits, no, to its practice by applying blockchain. I mean, tax administration in Hong Kong may benefit from using blockchain in its internal operations. Yes, perhaps, but before they need to wonder whether a traditional database is not going to like to serve the same purposes as blockchain. No, so it might be useful, but it needs to be assessed like on an individual basis. And number two, given the difficulty in determining whether an asset is of capital nature or revenue nature, how can blockchain overcome such difficulty? No, I mean, I don't think that's a matter of blockchain. That's actually a matter of practice. I mean, blockchain is the technology underpinning the operations of either cryptos or CBDCs or trade finance-based platforms. It's not a blockchain matter, this one. I mean, determining whether you are a professional investor or not, these kind of tax-related issues do not depend on blockchain. I mean, blockchain is the technology behind the crypto digital asset, but that part is mostly about practice, facts, guidance. It's not about the technology used. Is there a chance that allocation of the nodes can be a basis of taxation? Could a single node be a basis of taxation? Well, actually, it's hard to establish where the nodes are located, no, because there are it's due to the very nature of blockchain, they are located like, we could say like everywhere and anywhere. No, so it's hard to establish where they are located. And I don't think that this would be like a good way, no, to establish like how to tax when it comes to digital assets. But I mean, of course, it needs to be explored, no, because it's a very new area. So I guess that any idea is welcome.
I see we've run somewhat over time, and thank you for continuing to stay with us and answer these questions. Thank you to all of those who participated, and particularly those who provided those well-focused questions. Most informing for me, as usual, with it's a complicated topic, but we've covered a lot of ground, and it's raised a lot of questions, of course. It occurs to me that it's almost certain that we're going to see some further announcements from the IRD in Hong Kong, possibly an amended version of that DIPN in due course, once the transactions giving rise to taxation concerns become more obvious, and the revenue begin to worry about whether or not they're going to be able to collect. The point you made, I hadn't thought of before, the point you made about paying salaries in cryptocurrencies rather than in regular currency is a very good one, and they've obviously thought of that. So I imagine they're thinking about this in an ongoing way. But Oriol, thank you again. It's been great to have you, and it's clear you put a lot of work into thinking about this topic, and then also thinking about the taxation aspects. I think this has been a great way to kick off talking about the taxation of digital assets in Hong Kong. I expect we're going to be talking about it more in the future. And finally, I owe you an apology for mispronouncing your family name when I introduced you. I had my second BioNTech vaccine shot about 2 or 3 days ago, so I'll put it down to one of the side effects of that. But I've got it right now.
So, no, it's tricky to pronounce. No worries.
No. Well, in any event, thank you once again, and we hope to have you back to talk to us on this topic or some related topics in the future. And thank you to all of the participants who've been with us right throughout.